Wissam, and good afternoon, good evening, good day, everyone. I'm Hessam Kalantar. I have a small boutique corporate law firm, also based in Dubai, with a small presence also in the US, given that we do quite a bit of work for US investor groups and corporates that are developing a presence in the region. And we do like M&A, joint venture work, some corporate finance work, restructuring, and fund work. So I'm going to, I guess I'll share my screen. I put together a small presentation. Let's see. And I hope to spend no more than about 15 minutes. Excuse me if I trying to find the right, okay, here we go. I think this is the right document, although I'm not sure. Let's see, I think, let me go to the very front. Yeah, this is it. So the agenda really is to spend maybe 15, 20 minutes at most, giving a sort of high-level market read on what's going on in the private equity venture capital space in the region. So it's really just an overview of recent developments and trends that I'm seeing working in this space. And I'll go fairly quickly. Please feel free to interject with questions or observations, and we'll keep it very casual and informal. So I'm not going to spend time. I did a version of this talk to a US audience some weeks ago. And when you're talking to the US, you tend to spend some time explaining things like what MENA really is and what kind of population we're talking about and what the GCC is and so on. But I don't believe we need to do that with this audience. You guys are well versed with all things Middle East. So I won't spend time on these sorts of things. This is a slide that just tells you about some of the the GCC countries and what they do with terms of imports and so on. And you'll see the UAE stands out in terms of imports, mainly because a lot of those imports are then re-exported, of course, which skews the numbers significantly. But I just thought I would point that out. But moving on, I'm going to get into what's really happening in private equity venture capital, which I think is going to be more interesting. So that takes me to the next slide. And sorry, I'm just going to reduce. So there has been a lot of movement in the private equity space. My overall take is that what's been happening in private equity is frankly not as interesting as what's been happening in venture capital. And I'll try to explain why. I think if you go back some 15 or so years ago, during that whole electrifying time that was happening in specifically the UAE before the financial crisis, we're talking about 2006, 7, 8, there was a huge explosion of private equity ambitions in the region. And you had a lot of homegrown PE shops popping up, raising capital. There was a lot of money in the mix. There was a lot of enthusiasm. And a few things have happened since then. The main thing that has happened is that a lot of those private equity firms are just not there anymore. What the financial crisis did is just put an end to a lot of those ambitions. And I think I've said here that back in the day, there were some 100 private equity firms in the MENA area. And now there are literally a dozen or so that have any sort of clout. And there's been a lot of consolidation in this space, and we can elaborate as to why. Fundraising is also on a bit of a downward trend in private equity. I think, if you're getting like $2 or $3 billion raised in a year in 2020, well, of course, COVID was a big factor there, you would have done well. So the numbers are significantly down from what they were even as late as 2014. So what's happening? What's this contraction of the market due to? And really, I think there's a few factors. I think the biggest one is simply that you've got a lot of these big brand private equity shops that manage billions of dollars. And I'm talking about the Carlyles and the Apollos and the CVC partners of the world, Thoma Bravo, TPG Capital, Bain Capital, all the brand names that everyone's heard about. Well, they have done a terrific job, frankly, of entering the market and building relationships with the sovereign wealth funds. Now, the sovereign wealth funds, in parallel, have gone to being strong to being super strong, right? So, we also, being in the MENA Group, we know who these guys are, right? We know ADIA, we know Saudi Arabia's PIF, we know Mubadala, we know QIA of Qatar and the Kuwait Investment Authority. Now, the assets that these guys have under management today are just mind-boggling, right? So, ADIA sits on $650 billion of assets under management, PIF, 430 billion, Mubadala, 243 billion. I mean, these are just mind-boggling numbers. And if you compare these with some of the biggest private equity shops in the US ones, like Carlyle Group is over 130 billion, Apollo is over, I think it's around 90 billion. So what's happened is that the sovereign wealth funds that were acting with in-house investment teams have cultivated very good relationships with these big brand names, and they are tending to do things together, which has had the effect of basically squeezing out some of the smaller players. And I just say here that the 10 largest Middle East PE investors now manage 3.7 trillion. And a lot of that money is money that's co-funded with some of these US asset managers, the big private equity firms I just mentioned. Where's this deal flow? I think it continues to come mainly through the UAE. I think in 2020, UAE still was a big destination for private equity money, but it was even a bigger origin of private equity money that was outbound to Western markets. Of course, Saudi's influence, Saudi's vision to reform at the pace that it's reforming is going to change all of that. So I'll touch on a couple of things here, which is some data here on market saying that I think 154 private equity deals, a big number, 216% increase 2021 Q1 versus 2020 Q1. But again, we're talking about billions only because the sovereign wealth funds are the ones participating, right? The other factor that has really had an impact on private equity in the region, of course, is Abraj. Right now, Abraj is a story that I think most of you know a thing or two about. Of course, very quickly, Abraj was the sort of poster child of private equity in the region. It had $14 billion of assets under management in its heyday, but then, of course, it had this epic collapse, and now, it was investigated by the Gates Foundation, and then all sorts of scandalous things came to light. And I think, as far as I know, the founder is in the UK fighting extradition to the US. So it's had a lot of bad fallout, to be honest, so far as the Dubai market is concerned, because it was such a success story. It was really the proposition was really attractive because there it was, a homegrown firm, firmly entrenched in MENA, doing things all across the region, and then for it to have come and then to have collapsed the way it has given a lot of foreign investors a bit of cold feet, to be frank, and that's been unfortunate. yes, Dubai is bouncing back. Yes, the financial sort of ecosystem has learned many lessons from this, but the truth is that it's still very much in people's minds when it comes to investing in the region, with foreigners investing in the region. Okay, so I think we can move on from this slide. Let me see what I have here. So what is it that, I think to illustrate my point about how the partnership, the sovereign wealth funds are not, nurturing with these large players. I think there's many examples of that, and that is happening both because the capital that's available locally under these sovereign wealth funds is looking for very groundbreaking, innovative investments, and they need the best, basically the best GPs that they can find. And I think when the sort of Blackstones and KKRs come through Dubai and Abu Dhabi, they can really sell, very effectively, that they can find very good targets and generate the returns that these sovereign wealth funds are looking for. These relationships have actually facilitated the desire of government-owned entities to diversify. An example of this is a transaction that, I'm focusing on these American private equity firms largely because they are so big and they have had the success they've had locally, but also because I was giving this talk to a US audience, and it was interesting for them to know how names and firms familiar to them are what they are doing in the region. So you had the likes of KKR and Blackstone and Global Infrastructure Partners actually coming together and investing in ADNOC's pipeline business. And that's very much a diversification play with, and you've had a few of these deals happening where government entities are trying to move towards an economy that's less reliant on hydrocarbons, and they are looking to private equity, inbound private equity, as a means to divest significant stakes in these companies. Another development that has affected private equity is the rise of these two free zones, DIFC and ADGM. Private equity, as I'm sure you will all appreciate, arises through capital raising via funds, right? So typically you would have funds that were domiciled in Luxembourg or Delaware or Cayman, Delaware less so, except when you're now talking about the US private equity firms. But you've had Luxembourg and Cayman funds domiciled there, and capital coming out of those funds going into the region. I think what we've seen over the last few years is that ADGM, Abu Dhabi Global Market, which is a free zone in Abu Dhabi, and DIFC, its rival in Dubai, have done very well in developing rather robust fund regimes that have a lot of flexibility, that have all the infrastructure where you could do, various types of structures, foundations, SPVs. You could do, segregated portfolio companies. You could do self-protected companies. You could do limited partnerships. Everything you can have in Western jurisdictions, you can now have in ADGM and DIFC. And they have come up with various levels of fund regulation depending on the type of fund you're setting up. And now, increasingly, when people are raising capital from a Middle East investor base, they will happily consider domiciling the fund in ADGM or DIFC as opposed to Cayman. And also the level of regulatory oversight that you're getting out of ADGM and DIFC is in fact today greater than what you would at least traditionally get out of Cayman or BVI. And that compliance burden is only increasing. And in a way, they kind of, DIFC and ADGM are sort of trying to outdo one another and attract the asset managers, attract the financial service providers, and it's actually made for a very healthy rivalry. Family businesses, anyone who works in the Middle East knows that family businesses here are an important contribution to the financial landscape, and they are. This is also, I would say, quite a recent development where they are now developing greater interest in private equity, both as sellers, more as sellers, frankly, than as buyers. Family businesses, all the big legacy families in the region, they typically like to do proprietary deals as opposed to putting their money in a pooled investment vehicle. So they see a target, they like the target, they want to do a bilateral deal. So they don't, this is not the sovereign wealth funds, that's the opposite. I'm talking about traditional family businesses. However, family businesses today are happy to sell to private equity. And there's a lot of legacy industries and non-core assets that they would like to divest. Of course, there's a bit of a price dislocation most of the time, and a lot of these deals are explored, but they don't really go through. But if you think about what these family businesses are mostly in, I mean, they're in things like commercial leasing and automotive and aviation and hospitality and brick and mortar stores, things that are perhaps less trendy than tech and crypto and AI and agri-tech and all those other things. And of course, you've got the younger generation in these family businesses that are coming up, and they want to get out of the conglomerate thinking mode and really focus on one or two verticals. And that's why there's a lot of these non-core assets available for sale, but those deals are hard to get done. Just a quick mention on Sharia compliance structures, typically not used for private equity or venture capital, but it's still something that's very much on the radar. And ESG, I know it's an increasingly topical subject. Of course, it's coming. There is regulation that is, some regulation has been passed. I mean, public companies in the UAE, for example, have to do ESG disclosures. And more of it is weaving itself into private equity. Now, I think we will move on from private equity and focus on venture capital, because that is a little bit of a different space. And I would say that there is more, dare I say, excitement and enthusiasm about what's going on in the venture sort of ecosystem in the region. There's been, please.
Edward, just before you go on to venture capital, out of interest, with this, you're talking about this zone, ABC, where they have their own regulation. Do you foresee something like Carlyle or a big private equity house? Do you think they might set up their own fund in that zone?
Yeah, so for example, absolutely. Mubadala, for example, just set up a new fund with an outfit called Catalyst Partners, and they are a US. It's completely a Mubadala thing, right? But basically, they brought in a GP from the US, and I'm trying to find. Actually, I have a note on this, and it's. And they are based in the ADGM. So absolutely. So you're getting Carlyle, I think, Warburg, Pincus, CVC Partners. They actually have offices now either in DIFC or ADGM, because, or they have a rep office or they have a branch, they have some presence because they can get a lot of money out of this region. So before they would just fly in, spend a couple of days, have high level meetings and move out. But now they're like, there is quite a lot of money that is destined out of the region today. And they are more than eager to pick it up. So they are here all the time.
Thank you.
So venture capital has been more interesting because it's been a bit of a nascent thing until about 5 or 7 years ago. And we've had a couple of big successes in the region. Of course, Careem, the ride-hailing app, was acquired by Uber, and that was the first valuation north of $1 billion, making it the Middle East's first unicorn. And then you've got Kitopi, which apparently is edging up close to $1 billion valuation. And if you ask me what Kitopi does, I can tell you what I've read, and that is that they automate the processes for ghost kitchens, right? So especially, and they did terrific in COVID, right? Because all the restaurants had to shut down and people had to deliver food. So a lot of these restaurants gave up their leases and took these little warehouses for cheap, and they could produce the food. But then Kitopi's software platform allows them to deliver it, take payment, and so on. And now Kitopi is a very highly valued company, and they are going international with their offering. I don't know if post-pandemic their valuation will still stack up, but you're seeing these sorts of things coming out locally. And Angami is a music, I think it's kind of a Spotify that did a SPAC on NASDAQ. Again, these are local success stories that have really inspired a lot of people, but also the inspiration is coming from the government, right? Because the government is very eager to build an entrepreneurial workforce, to move people out of the public sector into the private sector, move into a knowledge economy, and they are truly, truly investing in these initiatives, incubators, accelerators, you name it. There's plenty here. They're trying to attract people to come. They'll subsidize if you're a programmer sitting in Berlin or Singapore and you've got a terrific idea, they'll do anything to get you to come. So there is definitely a movement around that. And it's really moved the needle in terms of embracing, in terms of, if you're a corporate lawyer, structuring and doing these financings, whether it's a seed stage, an angel round, or a series A or B. What's happened is the adoption of the very Western ways of doing these deals. It will be very familiar to the corporate lawyers among you that, using safes and kisses, these other instruments, convertible notes, all of these things are now commonly used for early stage investments into traditionally tech startups. And both ADGM and DIFC totally accommodate them. By the way, I just realized actually that I am not using the right presentation because there's a better version that has if you just bear with me, and I'm going to wrap up in about 5 minutes, but apologies if I do this. 1 second, I want to stop sharing this one. And 1 second, let's see, is it this one? Yeah, all right, so, and you can actually look at this at your own leisure. I will see if I can. So if I go share screen here. For some reason, okay, this is the one. All right, so I'll just go back up to, I think where I was is We talked about this in terms of venture capital. We talked about, well, there is, I think, another thing just really quickly worth mentioning is that, you know, overseas VC firms have been very reluctant to do things in the region. This was still a risky geography for things that are not cash flow positive, and you know it makes sense. But that is changing. We had Sequoia Capital invest, do literally a seed stage investment in Egypt, which surprised everybody. You've got the government entities like Mubadala attracting, this goes back to what I was saying before, attracting these big brand GPs and actually buying a stake in the GP. So they will get someone like a General Catalyst, which is run out of New York, to come here, manage Mubadala's own money. And of course that GP will make a carried interest, a performance fee, and Mubadala will say, okay, we want a share of that performance fee. Not only are you investing our money and giving us returns on our own money, but we want to own the GP entity and thereby share some of your carried interest. And that model seems to be working very well.
Hessam, sorry to interrupt, but we're running out of time.
Oh, sorry, this always happens. So I'm actually done. So I think what you can do in your own leisure is look at the appendix that tells you what kind of sectors VC deals have been done in what countries, and what amounts. And that's just there for your reading leisure.
So Hessam actually shared the presentation with me as a PDF, and I'll be sharing with everyone when I send you the minutes and the invitation for the next call. I'm going to stop recording now. Does anyone have anything to comment? I just have one.
Maybe Wissam, if I can just pose a quick question to
Sam.
Sam.
Go ahead.
What about, he mentioned that the family business are keen to divest some assets they have. Is it possible to know, or do you have the information about which geographic areas they have these investments possibly to divest?
Yeah, these are going to be local. These are going to be local assets that they want to eventually get rid of. But they never do, they don't do an auction, they don't do a public process. It's very hard to, it has to be a kind of one-on-one discussion, but they're all local.
Thank you.
Thanks, Hessam. From my side, I've worked with companies who had lots of large projects with Mubadala, and I was hoping that maybe at some point we could set up like a group of us and present ourselves to Mubadala as in some form as advisors or on deals having to do not only in the GCC but in a larger scale. But I think maybe this is something we can discuss over another call. I don't know if that's fine, because today something pressing that we need to talk about is Dubai planning. I want to check if everybody, I know some of you might have reservations about, I'm going to stop recording, by the way, right now. Thank you.